Welcome back to this week's episode with Ryder Realty's podcast. Today, I'm here with Justin Troyer, who's from Farmers Bank, and we are going to be talking about auctions and how the loan process works with all of that. Okay, Justin, thank you for coming today. We appreciate your time.
Of course, thanks for having me.
So we think that your specialty is auctions and financing, and you live in Kidron, so you market a lot to Amish people, and the auction is popular in Wayne County and all kinds of things like that. So tell us a little bit about what you could expect if you're interested in an auction.
Yeah, an auction is essentially still very similar to a listing. The only main difference with auctions compared to listings is they're normally always sold as is. Mm-hmm. So your home inspections, your inspections that you would want to potentially look at if you were looking at a listing need to be done beforehand. The only other part that plays into an auction sometimes is your down payment. A lot of times at auctions, you're looking at a bigger required down payment, maybe 5%, 10% up front the day of auction. You just need to know you have those funds. But in regards to financing, it's still very similar programs. You can do conventional 15, 20, and 30-year fixed rates. If it's more of a farm, we have the ability to do farm loans. So that's the part that kind of sets us apart a little bit being a community bank, is we have both.
Okay. Can you do FHA or USDA financing on auctions?
So to answer that question, we don't do either program currently, okay. But my understanding is can you? Yes, but it still has to meet all the FHA and USDA criteria. Mm-hmm. And that's the part you sometimes run into a challenge on those type of properties on, because you would have septic inspections, well inspections, and everything like that. And if you buy at auction and something like those inspections do not pass, you bought it as is. Mm-hmm. So you're still going to have to purchase the property as is.
Do auctions have appraisals still?
Yes.
Do they?
Yep.
Okay. I guess I didn't know that. So pretty much the only main thing that you think the difference-wise is that down payment.
Yeah, down payment. I mean, the biggest part is the people getting over, I wouldn't say fear, but I guess just that knowing in the back of their mind, hey, I'm buying this as is. Mm-hmm. So if I have a client who's a little concerned, I tell them, hey, go to open house, look for just a couple big clicker things. Like, does the roof look like it's okay? Is the water and electric on? Is there anything, foundational issues? As long as big things like that are fine, from an appraisal standpoint, you are generally going to be fine. That, and then the down payment, you are correct. You need to have, a little bit more down payment for some of those than you would necessarily have to for a listing. But that's also part where, clients, if they don't have the down payment on their own, they can get gift funds, or there's sometimes ways we can work around that to try to assist with down payment for them.
Okay. And as far as closing costs with auctions, are those buyers' responsibility no matter what, or do they still have the option to have sellers pay those?
You don't get the choice to change them, but most of the time it's like a normal listing, and that a seller will split part of the title cost and give you a tax proration. So a typical auction contract is very similar to a normal listing contract. Okay. You just can't ask for any closing costs or prepaid item assistance.
Okay. So
on top of the normal breakdown.
Responsibility.
Correct.
Okay. That makes sense.
One thing with auctions you got to keep in mind is buyer's premium. That's the only thing sometimes people forget about, because on listings, the price you pay, the price is listed for is what you pay. Yes. With an auction, not all auctions, but some will have a 5% premium or a 10% premium. What that means is whatever your final bid price is, you add 5 or 10% to that, and that becomes your purchase price. Okay. So say, example, you had a $100,000 bid price. If it had a 10% buyer's premium, that means your actual purchase price is $110,000, and your 10% down is based off of 110, not 100. So that's the only other thing, having the conversation with clients when they're doing pre-qualifications, that you got to keep in mind with auctions.
Another thing off the top of my head that I do see on most auctions is that buyer's premium is non-refundable, right? And that's due.
Well, the buyer's premium has nothing to do with. Buyer's premium just gets your purchase price. Okay. What's non-refundable is your down payment. Okay. So the buyer's premium is just there, and that is what dictates your final purchase price. Okay. What's non-refundable is your down payment.
Gotcha. So if you put that money down on auction day and something came up where you didn't get qualified for the loan, then you're kind of out of luck on that part.
If you would like an earnest money check on a listing, a lot of times if you write an earnest money check and something falls through, you're going to have to go through channels to try to get that back. Okay. It's not something that just gets released back. similar to a down payment at auction.
Okay. And then while you're here today, I also wanted to talk to you about Farmers Bank and what's unique and what other kind of programs you guys can provide to buyers.
Okay. So one of the things with Farmers, the saying we have out there is bigger, small banking. And I think that kind of ties into a lot of our lending department in that we have the ability to do a lot of your big commercial loans all the way down to the small credit cards. So when we were talking about auctions, one of the benefits with auctions is there can be a whole array of auctions. There could be land, could be a house. So you could be looking at a farm or a house on half an acre. That gives us the ability to still do conventional loans on a house, have the ability to do ag loans to buy farms. If we have somebody that maybe the house doesn't qualify or maybe they're using church insurance product and we have to do an in-house mortgage, we have all of those. Okay. Whereas maybe a smaller bank doesn't quite have the ability to do bigger loans, or where a bigger place doesn't have the ability to do something on the smaller aspect, we can do kind of any type of property you're looking at.
Okay.
We do our own in-house underwriting, so everything's in-house. I know the phone number to my underwriter. We can talk deals over personally, just kind of having that personal touch.
Yes, I would agree that Farmers is a very personal bank from my own experience with my own mortgage. What is your favorite part of being a lender? Just
seeing the smiles on people's faces. I mean, it's easy to say, hey, those first-time home buyers are always fun because you're getting that deal. Mm-hmm. But their first home, they get excited. But just seeing the pieces and putting them all together, everybody has different goals. And that's probably one of my favorite is it's not the same thing every day. I'm probably talking to 30, 40 people a day, and each one of those individuals has different goals. It could be a primary, it could be a vacation home, and that's the part that makes it fun.
I think we're going to wrap up this episode, and we're going to have Justin hang around, and we have one more episode for you coming up.